Hi class, my name is Jordan Swisher and I will be presenting my comprehensive market analysis on Fair Oaks Mall. So we'll start off with an executive summary. We are going to discuss four potential redevelopment sectors of the Fair Oaks Mall. We're going to look at office, residential, retail, and mixed use. And it's going to lead us to where I drew my final conclusions and my recommendation, which all the data to me points to a mixed-use property, adding multifamily residential with some ground level retail, redeveloping the indoor mall into an outdoor center with a focus on NGNS, F&B, and also some high-end GAFO. And then we're going to add green space for tenants. First up, we're going to talk about location and site conditions. First up, we're going to take a look at the location of Fair Oaks Mall. So it's in Fairfax County. It's located right here. I included just an image from a broker just to give an example of how much retail is in the immediate area. It's significant, which is great. It's a good sign. There's a lot of demand. There's also supply, so there's some competition as well. But it's something that is promising for development. So it's located at the intersection of Route 66, running east to west, and Route 50, north to south. It's a dense suburban area. The average household income within 30 minutes is 201,000, and the population within 30 minutes is 2.2 million. So we'll start talking about a little bit of the site conditions. In terms of geography, there's no major mountains or rivers in the area. With regards to the transportation, it's primarily vehicles. There is technically a bus to the metro, the Orange Line, that takes people into DC, but that's not a very convenient way to get to or from. And also, it's not particularly walkable either unless you're in the vicinity already, which you've probably taken a vehicle to get there. Some utilities, just to overview that, you have electric from Dominion Energy, natural gas from Washington Gas, and then you have your cable internet choices. You have Comcast, Cox of Northern Virginia, and Verizon, which I think is a good selling point when you get into residential because that shows you have some offerings for tenants, and that's obviously internet's a major player in where people decide to live and make sure that they have access to choices. So that's a good thing to note. And the competition is mainly retail and residential in this area. A lot of retail, a lot of multifamily. There is some office, especially south of Route 66, but it's not particularly strong in the way that retail and residential is in the area. So I put together what I'm defining as kind of the general market area here. I've also called out some competitive retail, residential, and office in the area in the blue and the orange and the green. Basically, this is essentially a 10 and then 20-minute drive around the mall. What I did was carve out, however, this section here, as it really does have a lot of competition here. I feel like the better opportunity is capturing to the east, to the northwest, and there's also opportunity to the southeast as well. If you get too far up here, you run into Tyson's Corner, and you're going to start eating away at some of your competition there. And as you can see, within the location of Fair Oaks Mall, it's very dense with retail and residential. Getting into the zoning, so the size of the property is 109.5 acres. It's developed at 0.39 FAR right now. It's approximately 1.6 million square feet of retail exclusively as part of the indoor mall. So in 2020, there was an approved plan amendment from the city to convert the property from retail zoning to mixed use. And part of that improvement was that there's an overlay with mixed use available up to 0.65 FAR, and there's options in there to increase it to 1 FAR, 1.0. Those options are if the owner were interested in helping to fund some of the public transportation. There's also some option in there for affordable housing as well to increase the FAR. But overall, that would lead to 4.8 million square feet of redevelopment potential if you took it all the way to that maximum 1.0. At 0.65 FAR, that's 3.1 million square feet. So obviously there's a lot of room for redevelopment here, increasing from 1.6 to up to 3.1, even on what's been approved. In the plan amendment, they suggested something like 25% retail and 45% residential, which that would be about 800,000 square feet of retail and 1.39 million of residential. So clearly the idea is to increase add residential and have it be more than retail. And we'll take a look at whether the market supports that. First, we'll take a look at the office market analysis. So in terms of the office market, globally and nationally, commercial real estate has a fairly positive outlook right now, especially going into the next couple years. We're kind of ramping back up after pandemic, but the office sector, I would say, is the least encouraging. And some notes that I wanted to call out with regards to Fair Oaks Mall, what we're seeing in the market is vacancy rates are climbing. We're seeing negative net absorption. There's also a very large redevelopment of Fair Oaks Business Park, which is something like 2 miles from Fair Oaks Mall. And they're redeveloping from an office park into residential. So I think we're seeing conversion away from office here. And the only type that does have decreasing availability in the market is Class B type office. So we'll take a look at that. We'll start with the chart on the right here. We see the availability rate in terms of supply is increasing across every type of office type, except for the Class B, which is decreasing in availability, which tells me that there's maybe some opportunity for some Class B development, which is not something that you really dive right into and is not going to gain you the highest market rents either. The other thing I want to note, and this is a pretty telling chart on its own, is we see vacancy spiking in 2024, going fairly high, around 24% forecasted. We see a very large negative net absorption, so there's concern about that. And there's also not really any supply incoming, so other developers are seeing this too and not biting on developing in this sector. All this leads me to a do not pursue for our office market. Next, we'll take a look at residential. This is an excellent location and time for multifamily residential development. So some things to note, we have a population that's growing in the area. It's projected to continue to grow at approximately 1.2% annually. And average household age is 38.8, projected by 2029, with millennial home ownership down. It's approximately 40% renters in 2023. I think that tells us that there's a great market for renters in this area. So as I noted, we've got population increasing, income is increasing in the area, market rent is increasing, vacancies are decreasing, net absorption is positive or flat, and we also have cap rates projected to decrease. So it's every single sign here is pointing to development in a great way. I think this chart really captures it all. It's an excellent view of the space. You have the absorption, which is positive or flat. You've got your vacancies increasing, from where it was previously. You have your net deliveries are coming through and you still have positive absorption. That's excellent. This is just a quick view of the area competition, just to get a sense for how many units, what types, and the average rents. I will note that Vista Fairfax is charging quite a high rent, and I would say that $2,000 a unit is a better average to expect for developers. Recommendation here is to pursue. Next, we'll take a look at retail. I'd say retail nationally is generally positive. There's a hesitant optimism. Some things to note about the existing space. It's an indoor mall. It's heavily GAFO. It's to around 200 plus tenants. The anchors are Macy's, JCPenney's, Dave & Buster's, and Dick's. I would say are also, I would count them as anchors. And within the 5 mile radius, you have 1.4 billion being spent on NGNS, and quite a drop down to food and beverage, 686 million, and GAFO at 1 billion. When we take a look at vacancies here, it's very clear what's going on. You have indoor malls spiking around 10 to 12% vacancy. Strip and power centers around 4%, and neighborhood centers around 0%. So when you're at an indoor mall and you have opportunities to pivot to an outdoor center, that's the clear move. Here we have market rent increasing, which is a good sign. And you also have the growth is like about level, steady, which is good. You just don't want to see it to start going down here. Here we have an overview of some of the competition in the area across the categories. Everything is very close. So I think there's a lot of competition, which is going to decrease your capture rate. And here, after I'm running my capture rate calculations, I'm suggesting that there's something around 1.6 million in available capture rate for retail, which interestingly enough is very close to what Fair Oaks is at right now. So the recommendation here is to pursue retail as well. Last, we'll take a quick look at mixed use. So your main goal with mixed use is to create some synergy across types. And so I'm saying, let's not look at office. Let's just look at retail and residential, multifamily specifically. How can we create synergy between those two? You can have residential, multiple buildings, several floors. You can feature food and beverage and some GAFO on the ground floors. You can also do a major anchor grocer retailer with an outdoor center perimeter with the residential nearby. That's also going to create some synergy for tenants. And lastly, I suggest adding new green space as well, which would also create walking paths between the spaces to help with mixed use synergy. And lastly, we have our summary. All right, so wrapping up, here's what I would recommend based off of the market. I suggest adding multiple multifamily residential buildings, several floors each, maybe 200 to 300 total units, retail on the ground level, focused on appropriate food and beverage, and also considering a high-end GAFO tenant mix. I suggest converting the retail, the existing indoor mall, to a large outdoor center. You should anchor it with a major NGNS retailer, maybe a grocer, possibly a big box, depending on how that works. You could feature food and beverage for the residents, and then review successful GAFO tenants in the current indoor mall, and then focus on trying to lease to those tenants in the redeveloped center. I think you need to rethink the tenant mix, refocus on the NGNS to capture some of that really excellent spend that's happening in the market, and then reduce the overall square footage from 1.6 million to around 1 million, which will allow you to use more of your FAR development for residential. And then finally, adding green space to where the current parking lot is. Consider walking paths between the residents and retail, fountains, trees, etc. All right, and that was my comprehensive market analysis of Fair Oaks Mall. I look forward to seeing your presentations, and let me know if you have any questions. Thank you.